When should you buy Bitcoin? You've probably heard about all the millionaires that were created by getting into Bitcoin early. Well, I'm here to tell you there's a multi-generational opportunity to invest in Bitcoin, but the timing is going to be everything. Stay to the end of this show, and you're going to understand what the future looks like, what happens with the halving cycles, and what the game plan should be for creating multi-generational wealth. Hey, I'm Dan Habib. Welcome to the Dan Habib Show. Thanks for joining me. A couple quick reminders here before we get started. Check us out at MBSHighway.com if you want the best insights in the mortgage and real estate space. And also, if you want an edge on investing in crypto and want more content like you're going to be getting in today's show, check us out at CryptoCharged.com and use code Habib for 40% off. And lastly, please like and subscribe below. So let's get into it here, team. Cryptocurrencies, you've probably heard about the investment opportunities, but you've also probably heard that from its peak set in November, Bitcoin is down roughly, at this moment, 70%. Clearly, the time that you choose to invest will determine your success. Well, I want to tell you here that I think Bitcoin right now is showing some opportunities that we have yet to see in our history if you hadn't taken advantage of buying Bitcoin back in 2010, 2011, 2012. The opportunity here is immense, and I'm going to break down for you step by step why. The first concept that we want to cover here is pretty easy. It's supply and demand. So when we talk about the biggest problems facing the U.S. today, it is that there is too many dollars out there in the system chasing too few goods, and that is causing inflation. Our dollar doesn't go as far, the cost of goods and services is higher, and you have the Federal Reserve and all of these central players that make big decisions affecting the supply of money, as well as our monetary policy, and ultimately the cost of money. Well, with cryptocurrencies and Bitcoin specifically, this operates on a protocol. It operates on a predetermined protocol that we don't have any of these external central factors that are determining the supply of Bitcoin, how many coins are brought into circulation. No, it runs on a preset protocol, and here's how it works. So what happens is you have these miners that are essentially the note keepers here. They are the validators. They are the ones that are keeping the network secure. They are recording all the transactions and verifying them against one another. They are the ledger keepers. And their reward, if they are the first to write the block to the blockchain in simple terms here, is that they get a reward in Bitcoin, as well as any fees attached to the transactions. Well, this reward started at 50 Bitcoin per block that you write to the blockchain. Now, through the different halving cycles that we've seen, the current reward is 6.25 Bitcoin. That means that you are going to be getting $130,000, $140,000 worth of Bitcoin as a reward. But here's the important part. This is the only way that new Bitcoin is brought into circulation. It is a byproduct of people keeping the network secure, and the hash rate has gotten to the highest level ever. The network is more secure than it's ever been. But take a look at this chart here, because this is going to show you the last halving cycle, which happened in 2020. That is when the Bitcoin reward went from 12.5 Bitcoin per block to 6.25 Bitcoin. But every 4 years, the supply that is going to be coming to market gets cut in half. If you look at the inflation rate, it is actually decreasing over time as opposed to the 40-year high in inflation we're seeing in our centralized finance system in the United States. Now, let's just do some math here. So the way that the mathematics work with the Bitcoin protocol is that the difficulty level adjusts so that approximately every 10 minutes, a miner writes a block to the blockchain. Well, if you do that math throughout the day, that means that on average, 144 blocks per day are written to the blockchain. And that means that at a reward of 6.25 Bitcoin, that means you have about 900 Bitcoin per day that are brought into circulation. But guess what? When we come to 2024, the next halving, which is probably going to be around April, that will be cut in half. The reward, instead of 6.25 Bitcoin, is going to be 3.125. That means that the supply of Bitcoin coming to market is going to be 450 Bitcoin per day. And if you go to 2028, it's going to be 225 Bitcoin per day. So you can clearly see supply is going down. When we look at demand, right, what determines price in any market? It's supply and demand. This is economics 101. You have supply that is not only declining, but we know Bitcoin is a finite asset, meaning there can only be 21 million ever created. Now, we've already mined or created over 19 million. Over 91% of the Bitcoin that can ever be created has been created. But the supply that comes to market each year is going to be less and less. How about the demand component? It is growing faster than the pace of the internet, potentially because it is now on the rails of the internet. And this is something that we anticipate, especially as we get past this current bear market, to increase and to evolve over time. Demand going up to the right, supply coming down to the right. What does that mean for price? It means it's going to go higher. But let's not just talk about this conceptually. Let's look at the market before and after each of the last few halving cycles we've seen. If you take a look, you can see here, initially, when Bitcoin was created, the reward was 50 Bitcoin. But we knew that the halving was going to be coming in 2012. There's always a market reaction from the bottom to the top right before the halving. And if you look here, back in 2012, before we saw that halving, there was a 637% return from the 400 days prior to that next halving. Now, what happens after the halving that we saw in November of 2012? You saw over the 371 days following that, an almost 9,000% return. What happened before the halving that we saw in 2016? Well, 518 days prior, you saw going forward a 415% return until the 2016 halving in June. What happened after the halving? Well, 546 days post-halving, you saw a 4,000% return. How about before the halving that we saw in May of 2020? Well, prior to the 511 days prior, you saw a 345% return from the bottom. And post that halving in 2020, you saw a 624% return over those 539 days post-halving that we saw in 2020. So here's the bottom line, team. When we get to April of 2024, we are going to anticipate a run-up prior to, like we've seen in every instance, and an even greater run-up post-halving when the supply gets cut in half. Now, let's just take a look and analyze some of these trends. Bitcoin tends to bottom anywhere between 400 and 518 days before the next halving. Now, listen, these numbers are just so far what we've seen historically. Does it mean it has to happen that way this time? No. But the bottom line is that somewhere in the range of 1 to 2 years or 3 years prior to the halving, you see this bottom happen. Now, 1 to 2 years. Based on the previous bottoms, I think a safe or an approximate time that you could estimate we see this bottom in this market is March of 2023. I think that's a roundabout number. Of course, it can be a little different, so don't hold me to the exact month. But I believe we will see a bottom, and then we will see that run up going into the April 2024 halving. Now, Bitcoin tends to top out anywhere between about a year to 2 years or so after the halving. Now, assuming that we get a Bitcoin bottom when looking at technical analysis sometime maybe in the first quarter of next year, I don't think the bottom is in yet here, team, even though currently in the market, we are seeing some rallies now to a little bit over 20,500. I think we're headed for a recession. I think all risk-on assets have not seen their bottom yet. However, let's just say we assume a bottom of 14,000 for Bitcoin. So we see it drop from 20,000 to 14,000, a 6,000 further decline. And if you take a look, the returns that we are seeing going forward as adoption continues to grow, they are a bit diminishing, however, extremely exciting. If we were to assume, based on this trend, a 250% rally from the bottom of, let's use a number, 14,000, you can assume that you'd have Bitcoin around 47,000 before the halving. But based on previous returns, Bitcoin should be well above 100,000 in 2025 to 2026. You also have to couple this with the fact that one of the biggest problems out there is all these companies that want to invest in Bitcoin, they can't do so because there's not regulatory clarity. We expect to get a lot more regulatory clarity next year. While a lot of people look at regulation as a bad thing, on the good side of it, once there's clarity, all these companies that have cash that they want to invest, they can then invest in Bitcoin. They can then invest in Ethereum, and think about the amount of money that you'd see come into those markets. Also, I think it's possible next year that we get a spot ETF for Bitcoin instead of a futures ETF. Makes it very easy for anybody to get access to Bitcoin and actually have real Bitcoin in that ETF that you're buying, as opposed to a future contract that is trying to track the actual price of Bitcoin. So here's the strategy, team. It is almost impossible for people to time the absolute bottom of the market. But one thing that I am almost certain of, that is that this is a wonderful and exciting investment opportunity right now. You are seeing Bitcoin down 72% from its highs. You are seeing an asset that adoption is going like this and supply is coming down, and it is a very predictable supply. You don't have the Fed that can come in and say, hey, you know what? Let's go ahead and put some more money in the system. Or you don't have the central government that can say, you know what? Let's go ahead and devalue the dollar and let's print $3 trillion for some stimulus for the economy and for the citizens in it. It doesn't work that way in this. So when should you buy? Well, right around 20,000 right now, which is where the price is, it's a great time to get in at a 70% discount from the previous high and start dollar cost averaging. I do not want you to get in here and dump your entire investment bucket that you have set aside for this in one shot. Reason being, we do believe, or I do believe, that we are going to see price come down further from here. I don't think the bottom is in both the equity and the cryptocurrency markets. The other thing that you want to consider is you don't want to wait for that absolute bottom because there's all kinds of extraneous forces out there that can happen. What if the Fed pivots earlier than we expect? You don't want to miss this opportunity. So the best way to do it is, as you see price moving down, to slowly chip away at it and continue to invest. And if it goes lower, you can invest some more and reduce your cost basis over time. But here's the good news. Does it really matter if you invest at 14,000 versus 20,000 over the course of the next couple of years if it goes well above 100,000? It's not going to make that big of a difference. If you bought one Bitcoin today at $20,000, you're going to get a 5x return at least over the next 2 to 3 years, in my personal and humble opinion. So guys, don't miss out on this opportunity. If you want to learn more, make sure to check us out at CryptoCharged.com. We break this kind of stuff down for you every single day.